Welcome back to Forex Focus, brought to you by IG. Today, a down day for stocks, commodities, cryptos, gold, a lot of major markets with the exception of Treasury yields and US dollar, as traders and more people start to wonder, will the Fed hike interest rates again? We'll take you through why people are starting to think this way, just how likely it is, what markets are affected, and what to look for as these shifting odds evolve as we continue through 2024 and try and predict what the interest rate landscape will be. Let's start off with what got this story in people's heads. We had last week the release of the FOMC minutes from the last Fed meeting, and people that took the time to comb through this commentary, as you see a snippet here on the right, noted that there was a section that said various participants of these Fed members did not rule out the chance, the possibility that we could require further interest rate hikes, something that hadn't been talked about, what Fed Chair Powell hadn't said in remarks after the meeting. His messaging was that if rates were where they were for a sustained amount of time, that inflation would lower, that at this 5.25% to 5.5% interest rate, that is sufficiently restrictive over time to get us down to that 2% inflation goal. The meeting's now suggesting otherwise, that other members of the FOMC think that there could be another hike on the table if we keep getting stubborn inflation measures, continued U.S. growth in a lot of these key metrics. And so the result of that is now you're seeing traders price in a chance of a hike in the subsequent meetings of the year, from June, July, September, all the way to December. Now, none of those probabilities calculated using futures markets are above 1% currently, but those probabilities were non-existent. They were zero just a month ago, and now people at least taking some bets that maybe there is a chance that we could get another hike. And the reason we're looking at this September meeting probabilities is because this has been the one over recent weeks people have been watching most closely, that have swayed back and forth between these 50-50 odds towards cut or no cut, now looking more towards no cut in this September meeting, meaning by the end of the year, the most likely outcome currently is just one interest rate cut of 25 basis points by the end of the year. And so this has gone very back and forth. Earlier, at the start of May, we thought maybe the inflation and the U.S. economy, employment is starting to cool down, but now starting to get some more positive numbers once again, and taking out those chances of maybe 2 or 3 rate cuts by the end of the year. And we're seeing that play out across the interest rate market, across timelines all the way out to the 30-year. But here, taking a look at the 2-year yield and the 10-year Treasury yield, if you look at that left axis, the 2-year, today nearing 5% once again, and for the 10-year back above 4.6%, and both of those are right around their year-to-date highs, as this speculation just continues to increase the yield on treasuries, as far from the lows we saw at the start of May and the end of April. And so that's also playing out in this US dollar market, as traders are getting more yield for holding US dollars and going into US dollar denominated assets like those Treasury yields. You're seeing US dollar hit some key levels close to 108 against that euro. That's been pretty range bound between 108 and 109 in recent weeks. Now close to that 108 once again. British pound almost nearing that 127. And this has been a week-long trend from the long weekend, and now midweek, US dollar gaining a lot of strength. And what's happened this week? Not much. We had a medium consumer confidence number that beat expectations, but a lot of it is coming off of anticipation of US data later in the week, headlined by this April PCE data. That is the Fed's preferred measure of inflation. We're going to get that April number here on Friday morning. And what we're expecting is no change from March's figures. We had the year-over-year headline inflation rate at 2.7%. We're expected to get that again. And core inflation from this PCE metric even higher at 2.8%. We're expected to get that again. And so people are really speculating that we are in this kind of stagnant stage in the fight against inflation. And so a surprise here to the upside could really stir these rumors of another rate hike. Whereas if we did unexpectedly cool, we could get those fears absolved and perhaps even another rate hike back on the table. Maybe that September meeting is the first rate cut. And another data point we're getting right beforehand on Thursday is the second estimate of Q1 GDP for the US. That's expected to soften just a little bit. So maybe that rolling into this inflation measure takes off some of those rate hike pressures. But we'll see, maybe everything goes in line. And this is not what moves markets. But right now, midweek, a lot of anticipation for these key metrics ahead of the early June Fed meeting, as we look for more signals as to what the Federal Reserve will do and where they will take interest rates in 2024. Thanks for watching.